Good day, Junior Tickies. I'm Mrs. Brimmicker. We're going to look now at activity 4. In this activity, we're going to focus on the solvency ratio, which means, can the business pay off all of its debts? Does our total assets exceed our total liabilities? Is the business solvent? So if we look at how do we calculate this, we have to take our total assets divided by our total liabilities. And your answer should always be 1. If your total assets exceeds your total liabilities, it means that the business is solvent and they will be able to pay off all of their debts with their assets. But if the total assets is less than your total liabilities, it means that the business is insolvent and they will not be able to pay off all of their debts with the assets which they've got. Activity 4 now. 4.1. Prepare the statement of financial position for the year ended 31 May 2022. Calculate the solvency ratio for 2022 and comment on the solvency situation in the business. The solvency ratio was 3,1 to 1 in 2021. Information. They provided the statement of financial position on 31 May 2022. So this is an incomplete balance sheet. Balance sheet is another word for statement of financial position. We need to use the additional information to solve the balance sheet. So this activity, we're actually not only going to look at the solvency ratio, but we are going to look at other financial indicators to solve figures in my balance sheet or statement of financial position. So where do we start? This is now like completing a puzzle. We need to start putting the pieces together. So the first piece of this puzzle, if I look at the asset section, there's nothing that I can solve there. But if I go down to the owner's equity, current liabilities, they provided the current liabilities, they provided the current portion of loan. So the first thing that I can solve is the trade and other payables by taking the current asset liabilities minus the current portion of loan. That equals my trade and other payables. If we go now to the additional information, the fixed deposit was taken out 2 years ago. The interest rate is fixed at 8.5% per annum, or 8.5%. Interest is not capitalized. Interest received during the year was 19,125. So the fact that we've invested this 2 years ago doesn't really matter. We've invested the current financial year, we've received interest of 19,125, and interest is not capitalized, which means it's not added to the fixed deposit amount. So to find out the fixed deposit amount, we need to go back to the basics. If we look at how do we calculate interest in the first place, you have to take your fixed deposit amount times the percentage interest times 12 divided by 12, which means times 1 if we're calculating it for the whole year. Now they provided the interest, they provided the percentage interest. This means that your fixed deposit becomes now X. So to find out the fixed deposit amount, we're going to take the interest which we've received in this accounting period times 100 divided by 8,5, and that equals the total fixed deposit amount. In the next bullet, 12.5% of the loan will be paid during 2023. Now remember, whatever we're going to pay in the next financial year is always subtracted from your non-current liabilities, and it's taken to your current liabilities as current portion of loan. So now they provided the current portion of loan 90,000, and they said 12.5% of the loan will be paid during 2023. So I can use that now to find out what is the loan amount. So to find out the loan amount, we're going to take 90,000, which is the current portion of loan, times 100 divided by 12,5. That equals 720,000. But be very careful now. That 720,000 is not the amount that will appear as your non-current liabilities. Why? Again, whatever is paid in the next financial year must be subtracted from the non-current liabilities and taken to your current liabilities as current portion of loan. This is why we need to say 720,000 minus the 90,000, and that equals 630,000, which is the amount which will appear as my non-current liabilities. In the next two bullets, they provided the current ratio for 2022, 1,5 to 1, and the asset test ratio for 2022 is 0,7 to 1. So if we look at this now, when we're looking at the current ratio, to calculate the current ratio, it's your current assets divided by the current liabilities. And now they said to you that was equal to 1,5. If we're looking at the statement of financial position, the current liabilities was given to us, which means that your current assets becomes now X, which I need to solve. So to solve X, we need to take the current liabilities times 1,5. If we're looking at the asset test ratio, it's your current assets minus inventories divided by the current liabilities, and that equals 0,7. Another way of calculating your asset test ratio is by taking your trade and other receivables plus your cash and cash equivalents divided by the current liabilities. So those are my two options. If we look at the difference between these two ratios, current ratio means, are we able to meet our short-term obligations? By looking at our current assets, we divide it by the current liabilities. The asset test ratio, would we still be able to meet our short-term obligations if we take inventory out of the equation? So this is why I can actually say, if our current ratio is 1,5 and the asset test ratio is 0,7, and we took inventories out of the equation, the difference represents your inventories. Looking now at solving this section, I've got different options. Starting with the inventories. If I want to solve my inventories, we take the difference between the current ratio and the asset test ratio times the current liabilities. That equals my inventories. To solve the cash and cash equivalents, we've got now two options. We can either first solve the current assets, or we can look at solving the cash and cash equivalents by looking at the asset test ratio. If we look at the asset test ratio now, and we take 0,7 times the current liabilities, that equals 243,138, which consists out of your trade and other receivables plus your cash and cash equivalents. The difference, so if you take 243,138 minus the trade and other receivables, that will be your cash and cash equivalents, which is equal to 120,000. If I add all of that together, that equals my current assets. If you started with solving the current assets, you would have taken 1,5 times the current liabilities. That equals my current assets. So if we've got the current assets and we've got the inventories, then cash and cash equivalent can become the balancing figure. If you chose to solve the current assets and then your cash and cash equivalents, then inventories becomes the balancing figure. So take note of the different options that you've got. What is a fact is that you should have solved the current assets before you could have solved one of those two figures. Or you should have solved the inventories and the trade and other receivables with the cash and cash equivalents, then you could have calculated the current assets. Again, there's different options that you could have used. Just understand, if you need to find out the current assets or the current assets minus inventories, and they provided you with the current liabilities, it's always going to be times. If you are given the current assets, or you are given the current assets minus inventories figures, which is your trade and other receivables plus your cash and cash equivalents, and your current liabilities is your X, then we need to divide to get the current liabilities. Make sure that you understand that. If we look now at the last bullet, the percentage return on the partner's equity is 39%. The net profit was 560,274 in 2022. The equity was 1,336,600 in 2021. Now, if we're looking at this, to calculate your percentage return on partner's equity, you have to take your net profit divided by your average equity times 100. Now, average equity always consists out of beginning plus end divided by 2. So now they provided the net profit, they provided the percentage return, which means that my average equity becomes now my X, which I need to solve. So to solve X, we're going to take the net profit times 100 divided by 39. But that will now provide you with the average equity. And average equity, again, is the beginning plus end divided by 2. So if I want to know what is the end balance, I now first need to times that by 2, and then I'm going to minus it, the equity, which was the balance at the end of last year, which is the balance in the beginning. That will provide me with the total equity for the end of this accounting period. And once I've got the total equity minus your capital equals the current account balance. So now we've put lots of pieces together. We've looked at all the additional information. Now we need to find those final pieces. So we need to look at what can we solve next. If I'm looking at assets, the tangible assets is still unknown, or the fixed asset. So I cannot solve that, which means I now need to go down to the equity and liabilities. We've calculated the total owner's equity. We've calculated the non-current liabilities, and the current liabilities were given to you. It means that I can now calculate the total equity and liabilities by taking the owner's equity plus non-current liabilities plus current liabilities equals total equity and liabilities. You should know, if we're looking at a balance sheet or statement of financial position, your assets must equal your owner's equity plus liabilities. This means I can now take that total equity and liabilities, I can take it straight to the total assets. Total assets minus current assets equals non-current assets. Now the fixed assets or tangible asset becomes the balancing figure by taking your non-current minus your fixed deposit equals your tangible assets. So please take note, again, how we use financial indicators to find amounts, and it's important to understand that. Question 4.2 is calculate the solvency ratio for 2022. To calculate the solvency ratio, it's your total assets divided by your total liabilities, which means your non-current plus your current liabilities. That equals 2,6 to 1. 4.3, comment on the solvency situation in the business. The solvency ratio was 3,1 to 1 in 2021. To comment now, when we're commenting, we always indicate the financial indicator. We quote figures and we indicate the trend. In other words, did it improve? Was it increase or decrease? And then we give an opinion. So they provided us with the figure from last year. So now you need to make sure that you use your answer, which you've calculated in 4.2. And when we're commenting, we compare. Although the solvency ratio decreased from 3,1 to 1 in 2021 to 2,6 to 1 in 2022, it remains satisfactory. The business is solvent. The total assets exceeds the total liabilities. For every 1 rand of debt, the business has 2.60 rand in assets. So this is how we will comment when we're looking at the solvency ratio. We compare last year with this year, we indicate the trend, we quote figures, and then we give an opinion. Now, if we're looking just at those financial indicators which we used to find the missing figures, I'm going to show you now, if we were given the balance sheet and we needed to calculate the current ratio, we would have taken our current assets divided by the current liabilities, and that equals 1,5 to 1. If we're looking at the asset test ratio, to get the asset test ratio, we've got two options. We can take current assets minus inventories, or you can take trade and other receivables plus your cash and cash equivalents, and that must be divided by the current liabilities. So if we take the current assets minus inventories divided by the current liabilities, it gives 0,7 to 1. If we're looking at the next one, the percentage return on the partner's equity, how did we get that 39%? The net profit divided by your average owner's equity, which means the balance at the end of last year plus the balance at the end of this year. That equals 39%. So this is just to illustrate to you how did we actually get those figures. And we've done now in the statement of financial position, we've used those financial indicators to find those figures. Thank you very much. Next, we're going to look at activity 5. I want to leave you with this quote. You are the artist of your own life. Don't hand the paintbrush to anybody else. Have a wonderful day.